investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this very first day of February. We're going to look at the monthly charts in a moment. Let me just run this down here quickly, and let me just say it's going to be a really interesting day, because what happens normally with Fed speak is that whatever market is doing early on, if it's sharply lower, then as it gets closer to Fed speak, it kind of comes back, not to unchanged, but at least it comes back a little bit closer to off the lows. And if it's much higher, it comes off the highs, gets closer to the lows, waiting for the Fed. I think this is going to be a little different in that yesterday's move was purely mechanical, electronic or mechanical, whatever you want to call it, in the sense that that push up and extension right into the close was formula-based. In other words, it was big money coming in. As far as I'm concerned, the way I look at it and the way I watch the market move, and I watch it as much as I can intraday, all night, wherever I can, I'm always looking at the chart to say what's happening, why is it happening. And that just said to me that it was an aberration of sorts, and that people who went long, sometimes even reluctantly, but they were kind of pushed into that because of the technical veracity of the prices that they wanted to have moving up, and they needed to chase it to wrap up January. That's kind of the way I'm looking at it. Yeah, algos in the Duffy says algos are really important. That is part of it, but of course you also need human nature. And human nature just says, follow the crowd. It's just the most, often either the most lucrative or the most stupid thing, but following the crowd, mass herd inclinations, there's no way to stop that. That's human nature. And that's kind of what happened. So the give back this morning of about 120 points to 130 points, I'd say that was just absolutely normal for that last hour big push. Now it's a little different. Now the Dow's down 228. But you can see, I drew this in for my subscribers to my opening call. Every day I give it a call on the Dow. Been doing that for decades and decades for whatever services I've ever been having, whether it was professional clients or just having a news net and having everyone being able to join in. Look, you've got the Chapman Wave inside track repellent zone. This is the left side, is a daily Dow chart. And on the upside, you've got the Chapman Wave inside track propellant zone. Well, you've got the 200-period exponential moving average way down here in the daily chart at 30,000. Is that 482? I think it is. Is that? Oh, I can't even read it. 32,800. And what we're looking at is these other lines, the green and black and pink. That's the 9, the 14, which is still 9 is still way above the 14. That's a big positive. And both of them way above the 20-period moving average. In this particular chart, I just put Chapman Wave notations and the 3 moving averages. In this chart, the same chart, I have automated Chapman Wave resistance levels here. You can see there's a green, light green. That's 34,404. That's automated. And in the 120-minute chart, which made a peak F top just the other day, it's 34,001. I'm having to move to 136. That's automated. And you've got 33,489 as automated support. And then all the way down at the bottom, you've got the 33,000s. This is where you turn around at the 200-period moving average for a beautiful move up. It's where we added to our longs. Now, what we're looking at is within the context of sideways movements, yeah, I think you can see more of a sideways movement here. And the reason why I wanted to show you that, just to show you the inside track repellent zone, to show you how so far everything's kind of conforming to all the rhythm and the cycle and to the different the different trend lines that you can use. All right, let's go back to our story here. So I think that the sideways move, look, I could draw it in as a cup formation like here, which is already done. I could extend this to the right, a little lopsided. We often get these lopsided cup, I call it a gravy cup. Lopsided moves to the upside. But this could be, there are always two challenges. There's an upside and a downside. And the negative side of this would say, look at this wedge, this flag or wedge formation in the weekly chart, and we can't get out of the top, which is the top that I'm talking about right here. I'll just draw it in so we're looking at apples to apples right there. Here's the daily chart, which coincides with the weekly chart. More importantly, what you've got here is that the MACD is good. The stochastic is just okay. It's okay at 79%. It's not bad. On-balance volume is kind of weak. And what we're looking at is that the 9 is still way above the 14. That just says there's inner strength, but that inner strength has not been able to recycle to a leg C in the weekly chart above the 34,712 level. And that was the high of the 13th of December. So I'm just saying, I'm making it easy as possible. We didn't want to add to the 3 times long position or the 1-to-1 position that we've got. Yesterday I said no. I didn't expect the move to be quite as big as that, but I am saying that the buy mode still continues, but now I think it's going to be a little rough, and that's all I'm saying. It doesn't have to say we have a major sell-off, a major move to the upside. I just think more sideways. And what I'd said when I was interviewed by Tom yesterday, he said, my suspicion is that everything's working in the Fed's favor, because look at this move off the October low in the 28,000s. We've got all the way to the 34th, almost 35,000, and now we're consolidating. Nothing wrong with that. But every time the Fed needs to do something maybe the market is not really prepared for, it's got this higher consolidation going on, and it says that if the Fed, let's just say 1,500 points, let's just say, whoops, sorry, things are not quite as rosy as you thought. We're going down, so we go down 1,300 points. We're at 33,800, so we go to 32,300. 32,300 takes us just underneath the low of the 23rd, the week of the 23rd, which is 32,573, but it still has us nicely above the inside track propellant zone. So we've got room to make an H pattern here and consolidate. We have room to test the upside. You break above this trend line. You start to get to 34,000. I would say start leg C. That'll be a blue. It won't be a gray leg C anymore, because once you break above that leg B on the 27th of 34,164, I suspect that you're going to retest the 34,342 level. But if you pull back and you take at yesterday's low, it says, uh-oh, here's your alternate count. You're being repelled by the inside track repellent zone right there. Therefore, you can make an arch formation. I'm just making it as simple as possible. Therefore, we're still having quite a nice cash position. There are a lot of positions we'd like to get in. But look at the monthly chart. We've made a peak A. As we go to the break, wait a minute. Look at the monthly chart of the S&P. We've made just barely a peak A because we missed the 4,100 level by going to 4,194. Isn't that interesting? All we need is a little pop above that and we start new leg B in the S&P. I'll be back in a moment. Basil, Chapman, Tiger.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, folks, just as I was in the middle of the first segment, I suddenly saw that I had a whole list of mid-caps in my mid-cap 2000 screeners list, and a lot of them disappeared. The only one that's left now is CBay. CBAY, trading 848, up 9 cents. Slimer Bay Therapeutics, what a move up. And I had this on my screamer list. I don't actually, did I put it down on my screamer list? Let me just check. Under the C's. Oh, I guess I didn't. I should have had it. Because it's been popping up for a lot. And basically, what we're looking at is just going a straight line up. I didn't know how to get into this particular one because it looked like it stalled for a day and then it would run up, stall for a day and then run up. So it's gone just from, let's go to the low of, in December, it's trading at $3.50 and it's gone straight up to $8.50. Tough to work these things into a kind of a program that says, just grab this and close your eyes. What do you do right now? It's in leg E. It looks like it was really going to turn around. It looked like it was going to do that a lot of times. But now the on-balance volume is really oversold, but it's holding steady at 89% in the stochastic. MACDs, I don't know what therapeutics they do, but boy, these micro biotech stocks are just unbelievable. All right, let's get back to our story here. I want to just show you something that was very important because by only a few points in an S&P 500, that is, mouse, hello mouse, there it is. Let's go back to the S&P, SPX.X. So here's the weekly chart. It's gone out of the inside track repellent zone. That's really important. And what's very important also, talking about chart formations, you need to see a leg D in the weekly chart by going over 4100.96. 4100.97 starts leg D in the weekly chart, and it also starts, because here's your new month, a leg B in the monthly. And look at the way the histogram of the MACD so far has been improving. It's not great, but it is improving. And the stochastic is way off the low at 20%. It's at 36, not way off the low, it's off the low at 36%. But look at the on-balance volume, how beautifully it's holding up here. And that's just suggesting that there has been buying. In the monthly chart, it's cumulative and it adds up. And you've gone from 48.18 all-time high back in January to a low of 34.91. That was 4 months ago, October. And now what we're looking at, November, December, January, February. And now we're looking at testing the pink 9-period moving average and black 14-period moving average to attempt to move higher. So something should happen over the next 2 weeks that gives you at least one little pop above that left side high. And then what do? We start leg B. Now, if leg B fails all of February, it doesn't go very much above 4,100, it goes to 4,125. And then fails and comes back and you close below that. That just says, uh-oh, rectangle formation, you can last a lot longer in this particular pattern than your patience, and then we're going to be watching. Let's look at the monthly chart of the QQQ, NDX 100 trading vehicle. That's called the Invesco QQQ Trust Series. And what do we have? We have a leg A, not a very big one. You've gone from 408 back in November 2021 to 254 in October. You've gone out of, it's a very steep inside track repellent zone, so the steepness alone, just on time, you would move out of it. So this is okay, it's not great. I've got it as a leg E at this particular point, but you really need to see at some point on a whole week, you want to see a good close sharply above the high of 311.08. This is called a 312 from the high of the 16th of September. That will say to me, great. Now this is a very concerted, this is a really good magic way of looking at the market by saying using time and price rather than time or price is really important, because we've now used time to consolidate on the downside. And that's what I'm saying, is that the Fed has an opportunity now, with the markets having come off so strongly, even from the December low, in this case 259, up to the high up in the 290s 4 days ago. You can pull back. You can even pull back 50%. You can pull back to the 275 level. And that will still say 275 just gets you into the inside track right now. And on the weekly basis, the week is still young. This is only Wednesday. We've got another full day to go, plus 2 extra days. And the 9 has gone over the 14 period in the QQQ weekly. We have to wait till Friday to tell us. But look, the stochastic's running nicely. So there is movement. What I'm saying is that if the Fed comes out with something negative, we do have room on the downside as a cushion. And that's really important. If they come out and the market perceives whatever they say or don't say or whatever it is as very positive, we can start another leg to the upside. But I've just got a feeling right now, the way I'm looking at the market, the way I'm looking at certain areas, that there are so many PDs and E's and even F's in the daily charts that we just a little bit extended here. Yes, the IWM could have made a Chapman Wave instant restart by accelerating high yesterday, and even today's up 191.70, up 22 cents. Nicely out of the inside track repellent zone of the weekly. Monthly chart really still looks very poor. But these dailies and weeklies that's the only way the monthlies ever improve, is that the dailies and weeklies move. So we're watching that closely. And just a quick question, could you quickly go over to your 1 minute chart? Yes, my 1 minute chart. It's been, I could spend a whole half an hour at least talking about all these different patterns. The most important was this big spike up at about 8:15. And it must have been some news or something. A big spike up, and then it gives it up, and it makes an arch formation in a beautiful symmetric price time match, breaks the rectangle and arch formation, goes to lower lows, goes to a trough G/C. Remember, G/C very often could become a G rallying, and it did. I used a phantom peak right there, A. Then it gives you B, C. We're always looking at D. Other things can happen. Pulls back. The 9 didn't close under the 14, and then pop, it went to an E, and then it pulled back even sharper. It made a beautiful left side, right side price time match to that peak D. Well, almost to the bar, the 1 minute bar. peak E plunges in an arch formation, but it holds quite nicely and it goes to that G/C, extends down to a D, and it goes peak A, peak B. You had that beautiful rally, and then just before 10 o'clock, you had a leg C. I said to myself, I don't have time to type this, but I think there could be a C1, C2 here, and it did exactly that. I'm not sure if it actually broke it by a quarter point because I was busy at the time. 4,089.75, 4,089.75. So that's your peak C1, C2, the phantom peak C on the right was really important. And you plunged down and you did a symmetrical price to, I use particular candles if it isn't a very obvious high or low. And that took you to a move that actually took you to the bar to test the low that was made at 936 of 4,073.50. What was that low? 4,073.25 by 25 cents. And now we're stuck in a trading range with another arc formation. And look at gold.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So I'll go on, but I had a couple of questions that I really want to get to. I don't want to run out of there because they're very important questions for me and for the questioners. So, wants to know, can you review Myrna? Actually, and I had a question about that over the weekend, just to confirm that what I had looked at earlier on to say, yeah, Myrna's in that rectangle formation. This is Moderna, Inc., biotech, COVID, many other trials going on. I mean, it is a fantastic company, but it hit 497 back in August, having gone from the teens or even the $10 range, all the way up, and then it came all the way back down to the double bottom at 115.61 in the week of July the 17th, June the 17th, and then September the 7th, it goes to 115.03. A beautiful retest. It does go under it, but then it goes up, and it rallies all the way to the two teens, about 218 or so, and then it comes back down. And today it's having a down day, down 8 at 168.10. I don't know if this is minus 4.52, if it's earnings or whatever it is, but I've drawn in the rectangle formation. I said, I suspect it's going to be in this trading band because that's the pattern that we've been looking at for so many charts. And I can't believe it because I talk about this all the time. Stocks in completely diverse areas very often match patterns that are happening in something else completely different. And we've seen the sine wave where you go from a cup, then an arch, and a cup and an arch within the rectangle. And I drew this in. I should have drawn down to the low of the 162.78 low of the 12th. So the question is, what's Moderna doing? And I just think that Moderna is at this particular point in a big consolidation. I don't like the fact that that leg C, which went to a peak C back in December, the week of the 16th of December at 217.25, pulled back and then couldn't quite make it a little higher. So I could say peak C1, C2. It's a stretch if I make this a C1, C2 right now, based on the Chapman methodology. It really has to be within just a small percent, like fractions of the previous, like we saw with the double top that we just saw in the E-mini at peak C1, C2. So this says, just be real careful. This is the entire week. That's already 2.25 days we're looking at here. Look at that ugly candle. So I think Moderna, looking out, remember I had a questioner about 2 weeks ago, we were looking at it, who said, I'm long-term, I'm long from way down. I've added to a position. What do I think looking out? I think looking out, this is something that if you have a portfolio and you've done your homework on Moderna and you like it, then this is definitely a stock that is in the running to always have something that of interest in the biotech area that'll allow it to rally. Whether it rallies enough to break into the 220s in this first quarter, January, February, March, I just don't think so. I'm not looking at it that way, but I'm looking out towards the summer, and it depends. If it breaks and closes under 155, I'd say take a little money off from the core position. Now, if it's just near term, you say, what about it? I would not be looking at this as a buy. And I'm not sure I'd be looking at it either as a short, but I would say to you, now, underneath, before it held, look how many times it's held the 200-period moving average. Today, it's underneath the 200-period moving average of 171. It's at 168, not by much, but the MACD is turned down. Stochastic is on its way down at 19%. The relative strength is weakening a lot. The 9-period yesterday closed under the 14 with a doji candle, and now we're underneath the doji low. That usually says you could get a 1-to-1 to the downside. That makes the 158 area really important. That's 10 points down, but it makes it really important to hold in the beginning of February. So I just be a little careful. So I'm not sure if you just wanted me to review it in terms of where we are right now. Where we are right now is we made the second arch formation, and the rectangle formation is really being tested both in the daily and the weekly chart. I do not want to see, if you're long and you're kind of stubbornly long and you're not flexible enough, at this particular point, if the question is, I'm long and I have a nearer term long position which is underwater, what should I do? I'm going to say to you, I would take that position off. You can always put it back, and if it starts to rally nicely, then you got the rectangle formation. It says, great, now you can rally up to the 200 to 205 level, because that's the way rectangles work. But this particular moment, you've taken out that left side low of the 6th of January. So I'm just saying to you, just lighten up a little bit on a trading position. On the core position, if it's much lower down, I'd still be holding that, because this is a company that always comes up with something. But it might be a little tougher now, market-wise and sector-wise. With the large biotechs are not doing anywhere as close as beautifully as, remember the one I just showed you, CBay. I can give you a whole bunch of others. Look at this, CBay up 24 cents today, up 2.8% at 863. So that's very different. And if you go to the IBB, which is the biotech NASDAQ biotech sector, that's as an overall pattern. It's got the same rectangle, which produces a cup formation, which then becomes, which can rally to or just under or right above the left side high, and then it can start to pull back. And if it takes out halfway of the rectangle formation, be careful. So this is down $1.25 at 135.30, and it just says, here again, we're stuck in a range in the IBB. Monthly is improving a little bit. That weekly chart as well is saying, look, I've drawn this in to show the vertical measurement from the high that was made back in December, the week of the 2nd, and the week of January the 20th, when 138.13 was the high there, and 138.74 was the high the previous. And look, the MACD I said was good, and it's still rallying, but it is narrowing. The histogram starting to shrink a little bit. It's still way above the 9. Well, now it's touching the 9-period moving average in the weekly, but this 9's way above the 14, and the stochastic's still good at 85%. So what I was saying is, overall, the biotechs, based on the IBB, I would just say that they are holding very nicely at this particular time. And Moderna has a little, look at the left side chart, and here we go, mRNA. Keep your eye on the left side chart. It's a very different chart. There's a rectangle, but we're at the lower end of the rectangle. That's what I'm saying. All right, a couple of other questions came in. I want to get back to the S&P, but where was it? IFF, this is International Fragrances. What do they call themselves now? International Flavors and Fragrances. They changed the name. Made a peak E over the 200-period moving average daily, pulls back. Now it's hugging that line. It's in a peak A, B, a peak C in the weekly. And if you look at the monthly, there's this arch formation, and it decisively took out the left side low from 2020. Ran all the way to the 150s, slumped down to the 85 area, and now it's trading at 112. So it's interesting because I always think that fragrances, they're the last ones to perfumes and things to really suffer in a weak economy. But look at Ulta. It's a different kettle of fish altogether. Ulta is still climbing as we speak. Ulta is making a new all-time high. This is an alternate count. E, F, maybe a leg F to the upside, leg E in the weekly chart, a leg E broke out of the inside track repellent zone in January. Isn't that amazing? Different kettle. This is the bifurcation we're looking at all over the show. In sectors, Bank of America is way weaker than JP Morgan. It just goes on and on. I'll be right back. The Dow's down 250.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yes, I got a 1 minute chart of gold just went to a leg E. It's all within this rectangle. Remember, a rectangle formation can start a move with higher lows and higher highs. It can go right to just under, right on, or just above the previous high to a peak D or E. And then you got to watch it, because if it takes out on the way down, if it comes and takes out in this rectangle formation, the midpoint, this is a 1 minute chart, we're just having a little fun here, takes out that midpoint. In this particular case, it's called 1942. If after this it takes out 1942, at any point, it should retest this low that was made, which is 1938.3. We'll be watching that. Or you're starting to make a cup formation, breaking, going to the 1948 level. Looking at the ESH23, there's the 1 minute chart. It's going to peak B, a little double top here. This is that same rectangle. It goes from an arch to a second arch. Lowercase h goes to a lowercase m. So let's get back to the questions that I had. So, yes, what I wanted to say is that Bank of America, this is the first time that we do not have Bank of America for subscribers in years, like 7 years or so. Every year we've had it and let it run from the 31 area to up to whatever it goes to. And then we take money off the table, and then we watch it come back, and we do it again. We get out completely and wait. This time, for some reason, we got out, and then it went down to the 31 area. It's trading right now 35, which is a very nice percentage move, not like some of the huge moves percentage moves we've seen in the beaten down NASDAQ stocks that have run off the lows. But it's stuck in a range. This is the first time that the XLF is saying to me, just keep watching it. It's doing okay right now. It's actually doing quite nicely, but it isn't really leading. It's kind of following. So the XLF is 36.41, and what I'd said is JP Morgan just on a move from the 100 level to the 140. That's a really strong move for JP Morgan. If you look at the monthly chart, still needs a lot of work from the 172 high in October 2021 down to the 101 low, but it is good. Now let's just get a couple of things going right now, because I wanted to finish the monthly chart in this segment so that as we wrap up, I can tell you what I'm looking for at the end of the day. And I have to say, it is a very interesting market right now, because if I just run over to a question about BLD. Oh, top build. I had not seen this before. They made a peak G, and then I haven't looked at it for ages. Top Build Corporation, so this must be in the building area, had a really strong move from the 140 area to 199. And if you look at BLDR, this is all in the building area. That's also, look at that, a really nice move. You look at the cup formation. And this is the thing, the mystery to me is, how do you get the HGX to do so well in this environment? Because I think we're looking at habitual buying. because it becomes a theme, it takes a long time before the theme is decimated. And that's what I think the Fed is, I don't know if they're trying to do it, but that's kind of, in a way, an objective of the Fed is to dissipate, to get rid of the buying pressure that it's seeing in the areas that really count, like home builders, etc. So I just want to mention that question that I came in. There were other questions, but that I had. I wanted to get to, and some demonstrations of some of the techniques, but let's just not do that right now. What I wanted to say is, let me look down here. So there's that. Yeah, Boston Scientific. So Boston Scientific, a fantastic company. It makes a low way back in, I think it was March of 2020, in the 24-ish area, and it has a huge move up, and it keeps making big moves up and then a sharp 50% move down and then another move up, and it's trading at peak E in the monthly chart. So this is medical instruments. So look at this one, and look at A is the Agilent, which we used to have. I don't know if there's earnings today. It's up 1 at 47.31, but it's in the higher range. Agilent is a stock that we owned in the 75s and went to the 100, I can't remember what it was, 150 area. Then we've been out of it for a long time. And it's had this is Scientific Solutions, Agilent Technologies, nice move up. And it too looks like the building stock. Look at that cup formation in the monthly chart. So this is in the scientific area. And if you look at TMO, one of my favorites that we never owned, Thermo Fisher Scientific Increments, and this goes back 20 or 30 years, at 589, up 19. I don't know if earnings came out, just spiked up. And this is also in the medical, Thermo Fisher Scientific Inc. medical equipment. So it's just interesting that the whole area of healthcare in the sense of equipment, looking at the biotechs, looking at the pharmaceuticals, look at PPH is this is the Fennec pharmaceutical companies. And here it's stalling in the daily. Weekly chart is held very nicely, but it's really basically a peak C stalling motion. And but isn't it interesting? And you've got some areas that are starting to weaken a lot. I just wanted to go through that. The other thing is IYT. The IYT is this is the iShares Dow Jones Transportation Average Index Fund, 282 high in May of 2021, plummets down to the 190s, has a really good move, and then stalls at a peak D in the daily underneath the weekly. So I want to see these things move. I want to see Jets, which had a spectacular move up, continue the move, but not stall here. So Jets is the U.S. Global Jets ETF. And you can see the resistance, and even for the airlines to go from 16.28 to the 20 area, that's 20. What is that? About a 20% gain, 22% in such a short time. It needs to hold it now. Okay, got that out the way. Now, what I wanted to show you is just let me go through. Oh, Amazon. So Amazon, I think, comes out with earnings this week sometime. Amazon's had a really nice move from the low of 81.43 on the 6th of January. It's made a peak B and it's stalling up at the 102 area. I do not want to see Amazon take out between 97 and 95. That's key support. On any move down in the market, if it happens over the next 2-3 days, that has to hold, even with earnings. Because if Amazon takes out 95, then that low that was made at 91, was it 90 or 90.70? 90, yeah, 91.52 on the 25th. If at any stage that gets taken out, then Amazon is in a huge stalling formation, and it's just saying, hey, things are not that great. But in the meantime, it's had a fantastic move into the 102.06 area. If it ever, in the next 3 sessions, if it hits 105.50, it doesn't even have to hold. It just has to hit 105.50. It says that is the kind of action you want to see in Amazon. Okay, so within that context, we've seen spectacular moves in stocks like a Wayfair that's gone from about 30 to 65, a double. Shopify, which has gone from the 23 level back in October to 49. Today's high is 50. I would say that's a little more than double, but it's going from 176 down to the 23 level. I would say that is ugly. So there's a lot of damage that has been done that needs to be repaired. Some of it has been repaired, And now we're going to see what does the Fed do and what is the whole area of infrastructure, of the steel sector. How do they cope with whatever comes up in the next few days? I'll be back in a moment. We'll do a wrap-up so that I can tell you what I'm looking for after Fed speak this afternoon. Basil Chapman, Tiger Conditions Hour, 1,300.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So we're looking at the peak C1, C2 in the 1 minute, and now you've made an arch formation, and that says just be careful because you can have a 1-to-1 of the arch to the downside, and that just makes the 4,063 area really important support level. You're at 4,067 right now. So let's just get back to our story. So what I want, this is what I'm anticipating, that the Fed it could suit them right now, because they're already looking at the market having a pretty decent rally. And don't tell me these guys don't look at the market. All of them are multi-millionaires. Some of them are much more than multi-millionaires. Not all of them, but almost every one of them to a T has been in the business. And like Powell has made a fortune. Didn't he go work for Goldman Sachs at some point? Anyway, he worked for one of the companies. So they understand the market. They're looking at the market all the time. So they're looking and say, hey, we've had a big rally. If we are prepared to do something, they don't say this out loud because it's just tacit that they all understand this. They could say that the equity market has enough support that if we come out with what we really think, and my thinking here is that they need not to say we're done. They need to just hold it out there to say quarter point. Could be could go on. It might be increased, might be maybe one-time decrease to nothing and then a quarter again. They have to hang it out there. And that's all the market really needs. It's get a little bit scared right now, a little overbought. Look at the candle here. We've given back almost everything from yesterday. One of the reasons why we didn't want to add anything other than on a very sharp pullback today is that it's good to have cash. There are a lot of stocks that are now overbought shorter term. They come back, and now we know that they're in the running for really big moves still to come in this quarter. That's the way I'm looking at it. So cash is king. Most important thing is make it as simple as possible. If after 230, let's go to 240, the Dow is managing for some reason able to come right back, it is now holding, instead of being minus 300 something right now, it's actually down only 80 points. That'll be a good sign. If for some reason it goes positive, that'll be a miracle. But if it stays lower, I would like to see it